do you want to introduce the whole premise, or is everybody kind of
aware?
The
whole point of the program is to connect investors worldwide, kind of to globalize the venture capital. And one of the reasons that we initiated this program is because of the differences between the mindset of venture in Russia. It came from Russia. We started working in Russia, and there is a difference the way that they treat their investments. And Russian venture capital organization also does lots of different activities, and I thought that it would be awesome to do it. Unfortunately, we didn't get enough people from Russia in this program, but we have other participants from Ukraine, Poland, Russia, Estonia, and local investors. So thank you for coming, and for fruitful discussion.
So what I'm hoping to do with this is actually get everybody in the room way more engaged in this conversation. So I want to kind of recap what you guys have gotten out of the last 3 days and figure out, what are the burning questions, and what are the things that these guys can answer. But I think we should start with a round robin of introductions. So Ho, do you want to start?
Sure. Honam Altos Ventures, we're early stage VC fund, managing about 150 million across 2 funds now. Most of the companies we invest in have some revenues, about 80% do at the time of our first investment. So we really like bootstrap companies. We try to get companies to about 10 million in revenues, burning as little capital as possible. And we're able to do that, and if the companies are in good shape at that point, it's fairly easy to raise growth capital. One of our companies is raising 30 million now, and they burn very little capital until then. And if things work out, actually, a lot of times you don't even need to raise that much capital, because by definition, if you do a good job of building a great business is something that business that spits off lots of cash. So that's our approach.
My name is Bipul Sinha. I'm a partner at Lightspeed Venture Partners. We are a global fund. We manage about $3 billion of committed capital. Our current fund is about $700 million. We invest in India, China, Israel, in addition to the US. In terms of our core focus, we are like to be the first money. Core focus is Series A. We can write anywhere from $2 to $10 million check, first check. Although to balance the portfolio, we do some expansion and growth stage investments. We do both consumer internet and enterprise infrastructure. So up and down enterprise stack, business applications, in the consumer, social, mobile, media monetization, e-commerce, stuff like that. So I'm one of the few partners who do both, consumer as well as infrastructure. So I do a storage system and dating platform.
Mark?
My name is Mark Rose. I'm kind of one of the entrepreneurs in the room, I guess you could say. I started a company maybe 5 years ago called Spare Change, and we ended up we bootstrapped that company, sold it to a company called PlaceBand Group. PlaceBand ended up selling that to Visa a couple years ago. And actually, I'm still technically a VP at Visa, but I'm actually leaving Visa and starting my next bootstrap company. So starting from zero again, so exciting. I've also made a number of angel investments over the last year or so, probably about half a dozen. I'm actually kind of, first starting to get engaged in that, I'm actually peeling back a little bit just because it takes so much time and energy. And I realize, okay, there's a time in my life when I want to do angel investing, and I'll probably do that after my next, company or two, and then get more active in that. So that's my perspective.
Hi guys, my name's Ayaz Haq. I'm a managing director with Exalt Capital Partners. That's an expansion to growth stage venture capital firm backed by a hedge fund in New York. Prior to that, I was an investor at DFJ, Draper Fisher Jurvetson, looking after the global franchise. Did that for about 10 years, so very familiar with the concept of investing globally. Like Mark, dabbled in some angel investments, got half a dozen or so angel investments, and actually enjoy spending a lot of time with them. And also, I guess I got caught up with this whole accelerator notion as introduced to me by Yuri and Vadim. So I'm also serving as an advisor to Startup Monthly.
Great. So what I'd really like to do is, from your guys' perspective, I'd love to just go around the room and kind of recap maybe a little bit of what you've gotten out of like the last couple of days and like what you really want to talk about right now with these investors. Start? You want to give your name and give them a little bit of background and kind of maybe summarize what you'd like to get out of this chat?
Yeah, I'm Andrus, and I'm from Enterprise Estonia. I'm local here, and so I'm representing our government, like a development agency and also funding agency. My job is to help our startups to find a foothold here, also to get the angel or venture capital connections and finally do the successful exits. I've been here five years, and just a month ago we had our first so-called successful exit as well. So I think we have had within 3 years all the stages. And why I'm here, I definitely want to also now connect our Estonian angel community to the Silicon Valley and get the ideas how can we support more Estonian companies to be here. So.
Okay, thank you.
Hi, I'm Olga Bilkova. I'm from Ukraine, and we are managing accelerator in Ukraine, which is aimed to help Ukrainian startups to grow their ideas in the sphere of internet and mobile technologies. And over the last 2 days, I discovered so much that I'm wrestling with this idea of how do you manage the dreams for a country such as like Ukraine, which is with low internal market, with huge potential in terms of talent and technology we can produce, and such a, if I may say, egocentric system in Silicon Valley. So far what I heard is fabulous, it's great, but I see that for any Ukrainian team coming here, it will be such a difficult journey to discover themselves here. And I still know that for them it would be better to move here and develop their product here, because in most cases their ideas are aimed at this market. But I also understood so much throughout these 2 days. So if you will be able to help me to understand what could we do for them to help them to make this transition smooth, or maybe stay there, I don't know, maybe we can brainstorm here. How do we?
Let's talk about that actually, because I think there's been a lot of conversation about, international talent and ideas and international markets and what actually might get funded as an angel investment abroad, and how does that ultimately get supported from venture funding and making connections internationally to the Valley. So do you guys have any comments about, I know that you've, yes, please.
So I've done investments in Israel, which is slightly different, but in some ways there's an international context and there's a little bit of a cultural context. So the way I think about investment here in the US, particularly in Silicon Valley, is that your company has to be at the edge of innovation or the state of art for you to be able to credibly go to angel investors or VCs and say that we have something that could create an impact. What I find is a lot of international team has great ideas, really high talent, but they may not be at the edge of innovation, where their ideas are ready to strike a new market and really open up a new opportunity. So I think the best help that you running an accelerator in Ukraine can provide is to get them exposed to Silicon Valley, as well as not just to pitch ideas and get funding, but exposure to entrepreneurial ecosystem, exposure to experts, VCs, angels, to understand where they are investing. If they are like too far in and not at the edge, they will never get funding. So understanding what is the limit where they are investing money.
And I would just add to that we always talk about the quality of talent, but tied in, following up on the earlier point, that in addition to engineering talent, there's also entrepreneurial talent. So I would suggest that an accelerator such as yourselves should really try and foster that entrepreneurial talent as well as the culture that it infuses, and build that culture around it, because it's not difficult for entrepreneurs necessarily from, say, the Ukraine or Estonia or elsewhere who can demonstrate that culture or exhibit that level of entrepreneurial talent to make it here in Silicon Valley, and you know, we've seen examples of it. I mean, you know, we mentioned Estonia, and you know, I remember the time when you know, at DFJ we had invested in Skype, and you know, here were two founders who, you know, the back end and development was all being done in Estonia. There was a warrant out for their arrest here in the US, so they couldn't land here. You know, it was our team in London who met with them. So, you know, all those kinds of stories. So, but they had that, talent. And another point is that if you, as an accelerator, are bringing these companies over here for a further round of funding, you know, every venture capital firm has sort of their own criteria and also their own coefficient for risk. Some people, you know, may be able to take that. We just heard, you know, from the earlier talk from Jacques at USVP, and they may not have as high a propensity to invest internationally and take that degree of risk than, say, you know, a Lightspeed or some DFJ or someone else would be. So, but if you play to that and see what are sort of the interests and who are the VCs who would be looking to invest in such companies, I think you would be successful.
One thing I'll add to that too, just to extend to Bipul's comment, is on the edge of innovation, I'd say something slightly similar, which is like how close are to the customers. And so what I find when I work with Eastern European teams, you know, you're absolutely right, fantastic talent, great programmers, very bright, right? But they're not really close to the customers, not really close to the problem to understand how to build a product that really solves something that's interesting. I'll give it one example of a team out of Belarus. I know it's not Ukraine, but it's close enough. A team called Wargaming. I don't know if you're familiar with them, but they're just this huge success story. 2 guys 3 years ago. They're now a 500-person team. Just a huge game franchise. But so here's, you know, where, you know, they broke the mold. They made a game, and their game was called World of Tanks. Right? That part of the world knows a lot about tanks and a lot about tank warfare. And so they just nailed it. And so the game was tremendously successful in Europe, tremendously successful here in the US, and so they've seen a lot of growth. But I think a lot of teams like in Ukraine, I think they've got great talent, but they're not necessarily connected with the markets here, so they don't know what the customers want. And that's a challenge. So in some ways you need to get out here and communicate more with teams out here to be effective.
Yeah, you know, we haven't done any investments in Europe, but we've done 9 investments now in Korea. And one of the things that we've made, our first investment I think we made in 2005 or 2006 there. And the first thing we did was that we had them pull out of Japan. They were in Korea and they were starting to expand to Japan, and they wanted to come here eventually. And we just wanted them to just focus and nail the local market first, and then later move on. And you know, get closer to customers, you know the local market. Now in some countries, maybe the local market's not big enough. In Korea, it's not as big as Japan or China, but it's big enough. I think the top internet company has a 10 billion market cap, and then the number 1 gaming company has 10 billion market cap. So you can build enough value there. So we've really gotten the entrepreneurs to sort of focus on customers, local markets, win there, and if you win there, then you have a chance to then play in a bigger arena later on.
Do you want to add anything to that, or should we digesting? Okay.
We look at Bonn and SAP as well. Those are all examples, right, from the 70s. I mean, SAP did really well in Germany, and now it's very global. Bonn, you know, in this tiny country, right? It started in the Netherlands, became a global powerhouse for a time anyway, in the 90s.
most of the startups in your accelerator are looking at global markets.
Yes, we are destined to work with global markets because in this business you will not be able to get enough of revenue in Ukraine from Ukrainian customers. So right from the very beginning, the only way to make it very, growing fast is to get out of it and aim for the larger markets. We are too little.
Same as Estonia.
No, we are even
Israel.
it's smaller.
It's
Yeah.
even smaller.
Although, I mean, this issue came up when we did the conference in Vilnius, and the advice, the same advice came up, which is even if the local market, maybe Lithuania or Estonia is too small, is there may be a big enough market that's closer than the U.S., like Western Europe,
Or
Russia,
Yeah.
Definitely, yeah.
that is still close enough, and you can grow up to a certain point, and then the companies who have figured out the repeatable and scalable business model at that point can go to the US.
Yeah, and in some cases we do target the Russian-speaking world. We work for the same company because the Russian-speaking world is big enough. But the problem is not only the market size. Sometimes it's the infrastructure, logistics, e-commerce. For example, an internet store in Ukraine is called an internet store because you have a catalog of products on the web, but in fact all the payments are done in cash. So that's the level of e-commerce that we have in Ukraine. So we do have, out of the 8 investments that we made already, 2 are targeting the Russian-speaking world because it made sense. But the rest, they are coming directly to the US.
The way I look at investments is there are really 2 kinds of businesses. Either you are doing business model innovation or you are doing some fundamental IP technology innovation. So if you are doing business model innovation, then your view is colored by the cultural context. So if you are in Ukraine, so the infrastructure that you have to work within the context of that infrastructure. That may or may not be applicable outside. Look at it, China, right? I mean, their e-commerce started with payment on delivery rather than credit card payment. So that solves a little bit of that electronic payment issue. But if you think about the fundamental technology innovation, that's inherently a global business. So if you have a team that is doing some fundamental work around any part of the IT infrastructure, something fundamental, then they have to come to kind of a country where the propensity to adopt early stage technology is high. And by definition, Western Europe and US would be better market. But if you think about the local business model innovation, then you have to look at the local cultural context and then build a solution that fits in the market. And either you take a US innovation, business model innovation, it could be coupon, whatever, and then apply to that context with a twist for the local setting, or do a new business model. So depending upon what you are doing, you may or may not want to come to the US.
Mm-hmm. Yeah, well, absolutely, that's exactly how we can function. But then if we go to the option of the technology innovation, that you would come to the US, then we get into the devil lives in the details. No? So in theory, they have to come here because this is a better market for adoption. But then what? They come here and they arrive at the airport, and then what? They don't know anybody.
They know me.
Well, thank you. and that's the details that we here, as partners, are worrying about. We're already at the level of, we went from strategy to operational. How is the community going to embrace a bunch of good-looking Russian-speaking guys? So we're at the operational level already. So we're thinking, how can the community embrace those guys?
I mean, one of the things, just one data point, one of the things that I've seen work is, particularly in the Israeli context, when Israeli team come here, so they look at other people from Israel in the network working at larger companies. So they go and approach them, get some meeting. Because the goal for all of these teams is to get to the edge of innovation as fast as possible. Because if you are not here, and things are changing so fast that even if you think it's a great idea, when you land here, you figure out that you are probably 1 year behind and things have moved. So you have to kind of get to the edge as fast as possible and keep it at the edge. For that, you need to go to do a ground game where go out there and meet a lot of people really rapidly. And that cannot be done from like just having an air cover of an incubator. You need to really have a ground game, just like going to the customer and talking to the customer in rapid succession. So it's really, it has to be a coordinated effort from the team as well as you providing some air cover to solve that problem.
Hi, my name is Wayne Sutton. I'm based in San Francisco after relocating here from North Carolina early February. I co-launched an incubator accelerator for women Hispanic African American last fall in Mountain View, and then we ran a second class in San Francisco earlier this year. After identifying a problem between the entrepreneurs and the investors in the feedback loop, we decided to leave that and create a platform called Pitch 2 to manage relationships in between the two categories. And so throughout the program, we're learning a lot of information about the mindset of the venture capitalists and the angel and the criteria to look for what makes a good deal, a good opportunity, a good team. And I'm interested from the panel about data that you guys have collected after you've run a deal to say that that was a good deal, not a good deal, and some of the, what do you do after you meet with a company and come to find out after they may have went on and raised around, been successful from without your investment dollars?
Yeah, so I didn't get the last part of it. So.
You know, like how do you manage looking at all the different pitches that you see and from deal flow, and then analyze what's the criteria, let's say you analyze the ones we have done deals with, say 3 months, 6 months, a year time frame, and then you keep a track of ones that you missed or that you didn't invest in but now may be successful from raising a round from another company, another venture firm.
Okay, got it. Yeah, no, I mean, well, we call those type 2 errors. Type 1 errors are, you know, you make an investment, it doesn't work out, that's a mistake. Type 2 errors are, you should have made an investment and you missed it and it took off. We don't worry about the type 2 errors because, you know, but there's always going to be deals that you miss, and especially, you know, we're a small venture fund, so the handful of deals that we invest in, if we make those work, you know, there's plenty of reward there, so we just focus on that. And in terms of how we measure track performance, I mean, one of the things that we do in our firm is we try to separate as much as possible. It's really hard to do, to be intellectually honest about it, is separate the decision from the outcome. Do we make the right decision? And sometimes you can make a bad decision and you're lucky it works out, investment turns out to be fantastic. And sometimes you make a good decision and every investment is risky and it doesn't work out. And you bet on the right people and you would work with them again and you go to battle and you lose, and that happens too. So we try to separate out and judge people by the quality of their decisions, their thought process, and as we work with entrepreneurs, I mean that's exactly how we look at it. It's like it's a risky decision. We discuss it. We make a decision and we go, and we try to learn from that by you know, going back through our thought process if things don't work out. But it's like you have to really separate the outcomes versus the process. That's very important to learn. Otherwise, you learn the wrong lessons because you can make a boneheaded move and be lucky, and you think you're a genius, and the next time you're going to get crushed if you really think you're so smart and you got lucky.
Oh, quick follow on to that. Do you have I think one of the things, and let me know if I'm wrong here, but do you actually have a process or a way that you keep all this data at the moment? Like how do you actually manage keeping all of that over time?
Yeah, no, we could definitely do a better job of doing that, but there are ways that there's lots of, we have an online system which keeps track of all the different investments, and then we have sort of offline, well not offline, but not on a web-based interface sort of records of everything. We also keep track of all the votes that we made, and we have a voting system between the three partners on how many votes we need and what kind of votes we need to get the deal approved. So we track all of those things so we could revisit and do analysis, post-mortem analysis.
What would you give any recommendations to like how someone could potentially set up something like that to track, or anything that you've kind of learned in doing that?
Well, on the voting mechanism, actually, this is something that we sort of learned from DFJ and some other folks we've talked to, is the deals that end up working out surprisingly well are the controversial ones. The ones that worry us are the ones that everybody is excited about or everybody thinks is a good idea. So we put a lot of weight behind, it's not quite a silver bullet system, but if one partner is really willing to stick the neck out and everybody else hates it, those kinds of deals actually can happen. I mean, the way we do the math in our system. So, so the controversial deals could tend to be the big outliers, because the great ones are not obvious, never obvious.
And how are they more disruptive? Have you noticed?
Yeah,
that? Okay.
more controversial, more disruptive. So I would say, keep an open mind and be very open to. We love to be proven wrong. I love to be proven wrong. I mean, there are deals that I will have said, boy, what a terrible idea. And I would say, I would never have backed that idea. But then the entrepreneur comes back and you have the data and you have this thing that's starting to happen. And it's like, wow, it's like we love to be surprised. Like, this is really surprising. Something's going on. They discovered something, or there's a phenomenon we've stumbled upon. And I love to be proven wrong. I love to be surprised. So we look for those kinds of things when we look for investments.
And just adding to that there is a process. Each firm approaches it in a different manner. We don't get too hung up about opportunities that we've missed, because they'll invariably be those. If you're expansion to late stage fund, you do get a second chance, and that's why there's always this criticism of VCs that they never say no, an outright no. They always say, keep me posted, or one of my partners didn't like it, or but I'm a firm believer. Principally because some of them do have a chance of revisiting the deal and investing in it. And I'd agree with the comment that it's sometimes not that beneficial as far as the firm is concerned if one is always following the consensus opinion, and therefore there are various voting mechanisms in place. Some may have a silver bullet, others if they're voting on a scale of 1 to 5, no one is allowed to vote at 3. And some are 1, 0, and -1. So different ways. And you have to get a positive number to be approved. So there are different ways of approaching that.
And to show them this startup and investor scene here, and that's why I'm here, and I'm trying to find out as many things as I can right now during this my stay here, and I'm interested in everything what's about the startup scene here. And it's so different than it is in Poland. So our startups have to learn how to pitch here, because if they can't pitch in Poland in front of investors, it's still different than it is here. So right now for me it's obvious that they have to come here to learn, to be a part of this ecosystem, and it's only way to help them to find out how to build a product which fits to this market. So,
what are the biggest differences that you felt over the last day that maybe they can give some advice to address?
That we are not brave enough to pitch to everybody. We are not so open that we can ping an investor, or just to say, oh, hello, I am who I am and I do what I do, and can you help me? We are not brave to do that. It's not common in Poland to do that to investors, in front of investors. And also we are still afraid of stealing our ideas. So we are not so open to tell to everybody about our ideas, even if we have on a level with the prototype. So I see this, there are huge differences, and it's a kind of barrier for us that we have to pass through. And from my point of view right now, we have to come here to see this ecosystem, and it's only way to pass it.
May I comment on this?
Please. Yes.
Actually, I have a very mixed feelings after this fabulous 3 days. Being not very shy by nature, being educated in the US, being exposed to different level of high-level people, you know, in politics, in business, whatever, I feel extremely shy here. Like yesterday at the social, I wouldn't be able to do the job. The guy was, you know, pitching to me. I was totally like, I freaked out, you know? I basically freaked out. So now that I think about like my teams back in Ukraine, I actually don't know if it would be a good idea to send them on shock therapy, you know, here. And my only hope is that they are younger. They actually don't have to lose anything. They don't have any anchors, and they will somehow find a way. But you know, at this point in my career, I wouldn't be able to risk my life and come here, even though I love it here. You know, it's a fabulous place where innovations can, you know, be born every minute. But I think there is definitely a cultural difference between Europe and you know, this culture where from the very start you are taught how to sell lemonade on the street, how to approach people, how to ask voters. I think there is definitely a huge...
And you believe in yourselves, and this is that we don't have. We do not born with that.
Good on you for your courage, Olga. In fact, you'd actually do quite well here. Being honest and courageous.
The cultures are very different, but you know, we are living in a more and more of a global world, and people get discovered. I mean, I'll give you examples of 2 CTOs that I know that we've backed. They're both very shy. They got discovered, right? Well, one guy is Russian, and we have, I think, 35 engineers in Russia, and so we've been able to tap into that talent. I mean, he was discovered because he was just as a hobby, he was just writing code and submitting it to different open source projects, basically, and he was not even a programmer. He was just in the IT support department of some company, and very junior level guy. And in some Silicon Valley company, sort of doing some research, found some code that they thought was very cleverly written, and they traced it and they tracked him down, and they hired him. And they brought him over here, and then the startup got acquired, and he eventually went to Cisco, and he's left there and starting another company, right? I mean, it's a great story. And then another CTO, here's a kid, he didn't even go to college. He was just a high school kid living in Hawaii. I mean, so, you know, Hawaii market is very small. You know, they're not connected to Silicon Valley at all. And he was just for fun hacking on Yahoo. This is in the 90s, you know, he wanted to see whether or not he could hack into his Yahoo email account without the passwords, and he did it, and he found a bunch of holes, and he submitted those bugs anonymously onto Yahoo, and you know, he got some messages back saying, "Hey, who are you?" You know, and it's like, oh, it's like I don't want to tell him, right? But it's like, hey, we want to thank you. We want to give you a T-shirt, you know, give you a Yahoo T-shirt, and started getting into this email dialogue. And I realized that the person he was exchanging emails with was Dave Filo. You know, Dave and Jerry, I mean, those are the 2 founders of Yahoo. They started Yahoo, and by this time, Yahoo was already a multi-billion-dollar operation. And then they wanted to give him a job, and he didn't even have a college degree, right? So, you know, if you're smart and you're willing to do things, you know, hack into a site, or, you know, write code and submit it to an open source project, pursue your passions, I mean, this is a very small world. You will get discovered. Talent, we are looking for talent everywhere. And you know, one of our companies has about 500 engineers in Ukraine, so we know. The company's called Lohika. I don't know if you probably have heard of it, Lohika. Loica, it's one of the big outsourcing firms. It's an outsourcing firm.
So one,
They're in Odessa and Lviv, and a small operation in Kiev.
A comment on that particular point. So we invest in a number of companies, and we have been investing as a firm for over 20 years. What we have found is that a large part of our success is from immigrant entrepreneurs, people who have come from outside and have outsized ambition and really, really smart and know what they're kind of doing and talking about. So, I mean, if you look at Silicon Valley, in all of the noise of deal flow and all the talk about seeing deal day and night, there are only like 15, 20 deals every year that really matter, in the sense that those companies become a large company, big ideas. And what we have seen is that how you look, how you speak, it really doesn't matter. What really matters is that do you have an idea that can create or disrupt a large market? And it is shame on us if we are not recognizing that. So as a firm, we are out there to meet people who has outsized ambition and who are ready to work for it.
And sometimes, it helps when all it takes is one success story, and then you create that role model, and then whether you're in Poland or Ukraine, people will be like, hey, I can be like that guy. And also, to the point earlier that it's a global village. Now, one may argue that it's as difficult for a kid from Boston to come here and get funding for a social network as it may be, from someone coming from Ukraine or Poland or elsewhere. So yeah, they are. It depends on people's own desire and will to succeed, and also the nature of the technology or the idea that they're trying to develop.
I have a question. Would you argue against, so how we did it? We was in North Carolina, which is almost like another country compared to Silicon Valley. and my partner, we had a lot of relationships in the tech space, so we decided to reach out to those and said, look, we're going to do an incubator accelerator in Silicon Valley. So then that kind of started creating a bridge, but also started creating educational resources for our demographic to say, learn about the process here. Then there's Startup HQ in San Francisco. I think they're focused, I think it's an Australian founder. And they actually house, if you come from Australia, you can come and stay there for a while and then co-work out his facility as well. Would it be a good suggestion for individuals in this room to do something similar? It's like, part of that Startup Monthly that they have, they're incubator accelerator. More of those focus on the different demographics. I think there's an Israel incubator accelerator as well. So create something like that, foster the talent here, and then have a mentor program, and then from there, then the startups can come over here, participate in that, versus just come on their own. Now, I'm starting to see more programs like that, but is that part of their solution?
I would like to redirect the question a little bit in terms of kind of digging into that, because I think the common theme is how do you break into Silicon Valley, right? How do you actually, because it's very, you have to network, et cetera, and obviously Yuri's here creating this opportunity. And there are these instances where you have individuals, right, who are very talented, who can get picked up and hired. But I think if you are a smaller company, early stage, what are the tips that you would just give about breaking in here?
Well, I'm going to try and address it in a different way. Usually I'm asked, how do you as a Silicon Valley investor go overseas and what's successful? But a lot of those lessons can be applied over here. So, first and foremost, and I think to your point but I'll get to that later. The few things that I've worked are really in being very opportunistic. So even when people are looking to come over here, don't come with any sort of preconceived ideas. You know, if you've got a technology, or be open, be receptive. You know, even in terms of the amount of funding you're going to raise, listen to the feedback and be able to you know, change or pivot as needed. A second thing would really be that you know, most investors are really they're blind to where you're coming from. So, and they would focus on the individual attributes of a deal. And those are the same no matter, or usually the same no matter where you're coming from. So if you're knocking on their doors here in Silicon Valley, quite often they won't even assume until you, they won't assume until you tell them that you're coming from overseas or a different geography, and then they may ask about your plans of being here. But if you check all the boxes they have in terms of their investment criteria, and we've discussed some of them, you know, the idea, is it scalable, quality of the management team, you know, just the usual stuff that you've heard about, then that also helps, because you know, people are taking a bottom-up approach where they're looking at the individual attributes of the deal. And then, you know, the last point which I was going to make first is that you know, we talked about the 3 S's. So you know, we you know, when I invest internationally, you know, we talk about the 3 C's. That you know, you've got cooperation that leads to collaboration, which leads to co-investment. And I think that is the, you know, one of the purpose that we're here. You know, Silicon Valley, all of us guys here who invest together as VCs or angels, it's all about cooperating, collaborating, and you know, in many cases, co-investing. So the individual angels do that. Even the largest VC firms do that, and I think that's the idea that, you know, Startup Monthly has over here, that fostering this kind of cooperation and collaboration between accelerators all around the world. So if it is a global village, you know, eventually we'll start co-investing.
May I actually follow up on this co-investing issue? In Estonia, we have like a government, also VC arm, and then usually our startups, if they are already getting some traction, this VC arm also invests them with private investors. So how do you feel if there is like a government arm also involved already in a startup or a company?
And you know, I've seen situations, it depends on how that investment is actually structured. So for example, I'm looking at an opportunity, a company which is from Finland, and there the government also has a program. And in one way, it's great because it's in the form of a soft grant, so it's actually letting most of the equity investors leverage off that you know, fairly sizable grant, which in the case of this company was about €1.5 million, and they're you know, looking for a $500,000 or so equity round right now. Similarly, you know, the government of Singapore has a good program. So I would say it depends on how it's structured, and if it doesn't pose a problem as far as you know, if they have any sort of preferential rights, and usually they don't, and if it doesn't make for a complicated cap structure, one would be pretty open and, you know, actually looking at that favorably.
But at the end of the day, you invest only to a company that's already incorporated here, in the US, for example, not overseas, or.
Well, it depends. Once again, you know, many investors have different criteria, and usually investors who are pursuing an international investment strategy, they would be open to having companies which are in one of the accepted offshore locations, whether it's British Virgin Islands, the Netherlands, Antilles, Cayman. You know, when quite often when funds are investing in India, they go through a Mauritius vehicle. So I don't think that is necessarily a deal breaker for someone who recognizes and appreciates that this is very much an international company that you're investing in.
May I actually clarify this point about legal conditions? We were discussing the issue internally. Somehow in Europe, one of the popular jurisdictions was BVI. But everybody here told us Delaware it be. So can you please confirm or say the opposite if BVI is still acceptable? Because we do have few companies which were registered at BVI. Do you know?
I'm just told by every VC and angel I talk to, saying Delaware and California. There you go. That's just what people are familiar with. It doesn't mean
go
you can't
talk to
do
a
it.
lawyer and figure out which jurisdiction has the laws figured out the most, and have the history where you have go back and precedents that this thing has happened and this is how we resolve it. So Delaware has the most precedents. As a result, is the most widely used.
We take it case by case and be a good international lawyer.
Exactly, and it also depends, as I said, to on the types of investors. I know as an angel investor, when I look at something, I'd prefer for a Delaware jurisdiction because for legal enforcement, simplicity. Also, if I'm personally wiring money, under the Patriot Act, they want to know everything people have to submit. If you're sending money internationally to an entrepreneur, you need their copy of their passport. It makes for very tricky just going through what is a fairly small round, so in terms of some of the hurdles you have to go through. But if you look at investments, like say if we've invested in companies in India, there's certain tax considerations where then you go through Mauritius because you want to be able to repatriate the profits or what happens if there's a liquidity event. Quite often when one is investing in China, there's a whole a special structure that you can go through, the wholly owned foreign enterprises, or you can also have the IP of the company in a Cayman Island or BVI entity. So I think for an early stage company, the simplest answer is going to be Delaware if you want to raise money.
The bottom line is that you first find an investor. If you have an investor, they will figure it out.
Yeah.
I mean, these are the details that
Lawyers will figure it out. Yeah, because these are not deal breakers. Well, we made a huge mistake in one situation in a company where we passed because it was structured as an LLC. Maybe be a lifestyle business. You can't take it public, and we passed on it. And then later on, we ended up investing at a much higher valuation because the company just took off and has continued to take off. And that's a big mistake for us because we had to invest, I think, at a 5-6 times higher price later on. And so I'm not going to let a deal structural issue get in the way of finding a good investment and making it happen. And we had to change law firms, all kinds of stuff with this other company. It's a French company, and there are tax implications and so on. And we figured out how to make it happen, even though we had to find really good international lawyers. We realized that some of the really good Silicon Valley lawyers were not really as good on certain regions and so on. So, but if the company is doing well, investors will find a way to make an investment. It's not deal killers. The most important thing is finding a great business, a great entrepreneur, and then we'll figure out the legalese at some point.
So you've got about 5 minutes just to let you know, because they've got an event happening.
Yep, absolutely. I just want to make sure you had a chance to speak.
Hi, I'm Juliana Contet. I'm Chief Commissioner covering the technology sector for the Canadian Consulate based out of Palo Alto. I actually have the opposite problems that everybody does here. Because Canada is so close, and because we have several accelerators that we've run for several years, every Canadian entrepreneur wants to come down here. So we're doing the opposite. We're trying to keep them back in Canada because they all want to come here and they're not ready. So what I would like to hear from the panel is really more on validation and traction, because it seems like you know, obviously you need to have a certain amount of traction to enter, you know, to get the VC interested, but it seems like it's different standards in Canada versus here. So, and I don't know, maybe you're gonna tell me it depends on the case, but I just wonder, is there, do you have a calculation, or is there something that you look for, especially for, let's say, a company launched, you know, in March, you know, 3 months later, where do you expect them to be? Or, you know, I would love to get feedback on that, on just to be able to better assess companies before coming down, because I don't want them to come down and waste their money and time when they're not ready, and when they pitch to you guys, it's like, you don't have traction, you know? So I just wondered if you have
I can
anything
think that.
similar.
I have an experience investing in Canadian company. So one of my first investment in venture career was this company called Hootsuite. And it is, so I was the first investor, first money into the company. It was part of the Invoke Media, so we took it out of Invoke Media and incorporated the company as a Hootsuite, and then Ryan Holmes became the CEO. So it took us like a month and a half to figure out the structure and how it will work, because Canadian government has grant scheme where they pay for engineers partly, and there's some complications with that. So my experience with the Canadian companies are that most of the companies understand where innovations are happening, the edge of innovation. So and they understand what makes a company interesting for VCs. So for a consumer company, like when I invested in Hootsuite, it was still very, very early stage. They have launched a Hootsuite, and it was starting to grow the user base. So I would say for a consumerish, prosumer kind of company, if you have 100,000 users growing like 20-30% month over month with pretty significant engagement, is the time when a venture investor would be pretty excited about it, because that's when you are kind of getting out of the noise level and starting to get some escape velocity.
Are these companies that you're talking about, that I'm assuming you're talking about for Series A, or?
Yeah, I mean, I actually have, you know, all stages, but my issue is for more Series A, for the companies who want to come here that are too early. So I help startups at all stages, but the later one are fine. I've noticed the one that have lots of tractions, of course they're fine. But it's the other ones, and then that they're trying to show, you know, I don't know, well, wait, I have 10,000 beta users and I have all this stuff, and it just never seems, you know, it's not really enough for here, for Silicon Valley. So in order for my companies to be competitive, yeah, on the Series A round, I just wonder, like, how much traction is, you know, realistically expected?
Depends on which area they play in. If it is a consumer internet, mobile application, then the noise level is very high currently. So when you have that noisier market, it's hard to know whether they would be able to sustain their growth. So we want to see interesting growth rate, which is 20-30% month over month with high engagement. So if you have growth rate without an engagement, then there is a chance that the growth rate would come down. And if you just have engagement, not the growth rate, it means you have some passionate set of users who are crazy about your product, but then broader market is not looking at it. So, I mean, there is no right or wrong answer for this, but I'm giving you a feel of how we look at it.
And I don't think it differs if you're in the Canada or in the US. Like even in the US, you listen to entrepreneurs, it's really the same story, which is kind of like how much traction is enough traction. And there's no real good answer. And to the other point is a lot of investors too, right? That going back to the type 1 and type 2 problem, right? A lot of people like, well, they look at that, and even though you've got an entrepreneur who thinks that, wow, there's genuine traction, right? On the other side of the table, you've got the VC who's going, yeah, but you know, I don't want to make a type 2 error. You know, I can let that go because there's just something wrong with it. So it's, you know, there's just nothing specific about it. But I don't think it's different for Canada than in the US. I don't think so.
Yeah, I think the Canadian companies are pretty up to speed on like what would make an investable company here. As far as I'm concerned, I mean, I've seen a bunch of companies coming out of Vancouver area because of my investment. I used to go there for board meetings and stuff.
Vancouver, they tend to be better because it's more of an ecosystem. There's the companies in Vancouver and Newfoundland.
They're close to Seattle.
So we might
Okay, yeah, so let's just wrap up. I mean, is there anything you guys want to say to close out, or give a final piece of, you know, gem of advice before they kind of get on their way?
Well, one comment I'll make is that, you know, a lot of people from outside of Silicon Valley, I mean, they want to figure out how do we break into Silicon Valley. But I don't know if that's the right way to think about it. You know, if you don't focus on, the goal should not be to sell VCs. right, and impress VCs. The goal is to build a business, to have customers, to make money. And if that happens, then the investors are going to be beating their way to you, right? And so, you know, a lot of entrepreneurs, it's like, how do I impress VCs? How do I impress VCs? That seems to be sort of the mentality, and that's the wrong focus. The focus has to be on the customers, or the entrepreneurs. Hey, I'm just building this for myself because I want to use it, and I'm passionate. And they build it for themselves, and if it turns out that the rest of the world wants it, I mean, those are the ones that really break through. So, you know, Atlassian is a good example of a company. You know, they started in Australia, a very small market, and for years and years, VCs were knocking on their doors, wanting to invest in them, and they kept turning down everybody because they built a business. They didn't need any money, and then when they finally decided to do a Series A, you know, they talked to 6 firms, they got 6 term sheets, very short time, and they picked one. It was like a $300 million valuation, you know, and they did it. But for years, I mean, you know, VCs, I mean, we had heard about the company. Lots of people tried to call them, and they wouldn't even return people's calls, right? They just built the business. And that's got to be the focus. And if the focus is all around the investors, I don't think a good company will ever come out of that mentality.
That's a very good advice. I mean, I would say to understand the investor mentality, investors are always between greed and fear, right? The greed is that this could become a large business and it's an impactful deal for me, and fear is it could fail. So, and as far as the business is concerned, they have 2 risks, like business risk and financial risk. So, if you focus on the business execution, as just was said, and that would increase the greed factor for investors. And that's the best way to do it.
Well, can you repeat the last statement?
So if you focus on the business execution, that would increase the greed factor for the investors, and that kind of reduces your risk.
And reduce the fear.
It's like a balance.
Yeah,
go up.
really.
The other thing too, just because I've worked with a lot of people in Belarus and Poland and just in the last 10 years or so, one of the things I'd recommend is they're fantastic engineers. They really are. What they're not so great at is not so great at UI, they're not so great at marketing and distribution, not so great at communication. Right? Just those 3 things, right? So what I would recommend if they want to break into Silicon Valley, along the angle of getting more customers, is actually to partner with people, and they don't have to be in Silicon Valley, but if you're trying to break into the US market, right, partner with people in the US market who can help you with communication, who can help you with marketing and distribution, who can help you with the kind of the non-technical aspects, so you can actually create a product that customers really, really want, and still keep the company based where you want it to be. So think of the US as your cheap outsourcing country, I don't know.
Any closing remarks?
I think I would agree completely with all the points that have been made earlier. And if there is that killing technology, and also the ability to really, if you're thinking of it as a global play, then I'm sure you're going to get sort of picked up wherever you are. And at the same time, it really doesn't hurt to be, a big fish in a small pond. And a lot of companies have been very successful in that context. And then, those companies themselves may serve as the role models that we're talking about, and the entrepreneurs can go create something even bigger, or inspire or be involved in ventures that may be much more global in nature. But if you're really passionate about what you're setting out to do, and you're looking to create a category dominant company, which I think every entrepreneur should aspire to do. And if you're in it for the long haul, so many times I'm sure all of us have heard these pitches where someone says, well, yeah, we'll sell out to Google in about a year's time or 6 months' time, and we typically aren't looking for those kind of investments. We're looking for companies which say, yeah, we're going to be $100 million plus in revenue. We don't want you to sell out to Google, when you're about $10 million in revenue. So if you're going for that category dominance, then very likely you will succeed and attract the attention of investors, no matter where they are.
Okay, great. Thank you guys.
Thank you
so much.